Trying to buy life insurance for the first time can be an incredibly complicated and overwhelming process for the majority of Canadians. There's so many options to pick from. There's so many salespeople. There's so many companies. There's so much misinformation all over the internet that it can be quite overwhelming to try and get it and purchase it for the first time. And I think for a lot of Canadians, they just say, you know what? I'm not going to do it because it's too complicated. It's too confusing, and I'm just going to stay away from it. In this video, I'm going to give you guys the 5 best tips for Canadians that are looking to purchase life insurance for the first time. And by the end of this video, you'll know exactly how to buy it and what mistakes to avoid. And make sure you stick around to the 5th tip, because I share one point that could potentially be the difference between you getting life insurance and you not getting life insurance. So make sure you figure that one out. What's up, guys? For those of you who do not know me, my name is Philip Setter. I'm the founder and CEO of Affinity Life, which is an online life insurance platform here in Canada where you can actually view quotes 100% online and apply 100% online as well. So if that sounds interesting, I'll put the link in the description below and you can check that out. But without further ado, let's get right into the video. Okay, guys, I 100% get it. Insurance can be an incredibly confusing thing to try and purchase. There's salesmen everywhere. It seems like every cousin, friend, sister, brother, family member, neighbor is in some type of MLM. They want you to join or want you to go to their opportunity night on, a Thursday to learn about this thing. And it can be incredibly confusing. And here's the thing, actually, there was a LIMRA study, which stands for Life Insurance Research Management Association. I'm not sure what it means, but they're an association that does research on insurance statistics. And they did a study and they found that 1 in 3 Canadians actually avoid buying life insurance because they're just confused as to how it works. And that's one of the primary reasons why I started this channel, is to break down all the sales gimmicks and the marketing hype so you can understand how something works and make the right decision for you and your family. So the number one thing that you want to consider is, what loved ones do you have in your life that financially rely upon you? That's number one. So I think there's a misconception to who needs life insurance and who doesn't need life insurance. And most advisors here in Canada are going to try and sell life insurance to every single person with a bank account and a heartbeat. And in my opinion, I don't agree with this. 100%. I think the purpose of life insurance is to protect your loved ones in the event that you passed away. And what I mean by that is, if you passed away, would they be financially impacted and would you be leaving a huge mess behind? That's the reason for life insurance. So once we establish that we have loved ones in our life that would be financially impacted, then we can start to look at what we already have in place to protect them if we were to pass away. So there's a bunch of different things you could have. Maybe you have an emergency fund already. Maybe you have some investments set aside. Maybe you have some life insurance through your employer. Maybe that is 1 to 2 times your annual salary. So depending on what your salary is, that could be maybe $100,000 to $200,000 right there. And the last thing that you might have is maybe you have some type of mortgage insurance as well. So you buy your house and you got mortgage life insurance, quote unquote. Now, I hate nothing more in Canada as a financial instrument than mortgage life insurance. I made a lot of other videos on this topic. If you're interested in them, drop a comment below. But in a nutshell, it's a vastly inferior product. It might not pay out. It's always a declining benefit. It's post underwritten mean, again, that they actually figure out if you qualify once you die. It's a terrible, terrible product. And you guys can see I get a little bit fired up about this. And it's more expensive than life insurance, which is a much superior product. So if you have that, I would highly recommend watching the video below, cancel it, replace it with an actual life insurance policy. Mortgage life insurance is a terrible, terrible product. So once we figure out what we have already in place to protect our loved ones if we were to pass away, now we need to look at what does need to be covered. So a couple things right off the bat. If you have outstanding debt, this is something that you should not pass on to your loved ones. And by the way, when I say loved ones, I'm talking about your immediate family, a spouse, children, etc. If you're a single person, your debt is not going to carry over to your parents or to your siblings. That's not how it works. Unless they co-sign for that debt, it's not going to pass over. If they did co-sign, of course, they're on the hook for it. But if they didn't, it's not going to pass over. But if you have debt and you're married, you're common law, or you are actually married, that is going to pass down to them. You want to make sure that debt is taken care of. Mortgage is the other thing that you want to look at. It's a very nice thing to have the mortgage just paid off if you were to pass away, which leads me into the next one, which is your income. And this is one of the biggest things that you want to take into consideration, is that's really what we're replacing within the family. If you have a typical family that has children and they have spouses and you're bringing an income into the household to help pay for all these bills, if you passed away, the remaining individual then has to take care of the kids, do the laundry, cook all the meals, still go to work, try and do all these things without you. So the income is what we're trying to replace. So an average rule of thumb is you want to get 10 times your income into your family if you were to pass away. The other thing you want to look at is your children now. So if you have children within the family, that's obviously going to increase the need for life insurance a little bit there. And you also want to consider if you wanted to leave something behind, if they wanted to go to some type of post-secondary university. So on our website, we actually have a calculator, a needs analysis calculator, and you can put in all this information here and we can give you an amount that we would recommend. But setting and allocating $20,000 per child for a post-secondary education, if that's something that you want to leave behind, could be a very important thing. Now, the other thing that you want to consider too is if you're a small business owner, and that's a completely different subject if you are a small business owner, but that's definitely something, if you did run a business, you would want to have some type of life insurance in place just for the business operations. And if you had partners as well, you'd want to have something in the corporation so that they have life insurance to buy the shares from your estate. Now, the last thing isn't quite as important in my opinion, but it may be very important to you. And that's if you wanted to leave behind some type of inheritance to the next generation. So maybe this could be kids, could be grandkids, could be a charity that you want to leave something behind, but you want to consider that as well when planning your insurance needs. And that's more of a nice to have and not a must have in my opinion. But if it's important to you, then you should include that. Okay, now that we've kind of figured out exactly where we are and what we need, let's figure out how much coverage exactly that we need. And I kind of talked about this a little bit in the last point, but I mentioned that we have a calculator on the website. That's a really easy way. Go to the website, run the calculator. It'll give you an amount. However, here's again a general rule of thumb. You want to take in these following items. You want to take in your outstanding debt. You want to take in your mortgage. You want to take in maybe 10 times your annual salary. And that's going to be the amount that you need. And then you want to subtract that essentially from how much you have. This could be emergency fund. This could be investments. This could be savings. This could be existing life insurance through your employer. And that's going to cancel out what you need. And what you're left with at the end of the day is whatever that amount is. Now, here's one thing that I will say, even with our calculator on the website, and if you do these calculations on your own, something is always better than nothing. And so what do I mean by that? Well, here's the thing. A lot of people will go through the calculator on our website, or they'll do a calculation on their own, and they'll come up with a number. Let's say it's $1.5 to $2 million. And then they'll go on our website and they'll go and get a quote, and they'll say like, I don't know, Philip, I don't know if I can afford, let's say $90 or $110 per month for $1.5 or $2 million in our product, whatever it is. Okay. And I say, listen, here's the thing. Yes, that's what we recommend. However, at the end of the day, something is always going to be better than nothing. So you need to think about what premium amount that you can realistically see leaving your bank account every month and be okay with. If it brings you a ton of anxiety every time you see that payment come out of your bank account, you're going to start thinking in your head, how can I cancel this? This isn't worth it in my opinion. I want to get rid of this. So at the end of the day, you need to come up with a premium amount that you're comfortable with paying, and it's not going to cripple you financially, and you're not going to get anxiety over it, and you're going to see it every month, and you're going to have a good feeling thinking, I'm comfortable with that payment. It's not quite what they recommended. However, it's still a really good amount, and if I leave that behind, it's better than nothing. I can tell you from personal experience that something is vastly better than nothing. If we recommend 1.5 million, however, all you can afford is 750,000, I guarantee you that's going to be better than nothing if something were to happen to you. The third tip is now picking a type of product. So here's where we get into the main argument in Canada, and you'll have advisors everywhere. You'll have these advisors over there and these advisors over there, and everybody's recommending a different product. And they say, buy term over here, buy an investment. Maybe you should get a whole life. Maybe you should get a universal life. It's like an orange. We've protected. It's in the middle. That's a jab at one specific company. I'm not going to say who. Anyways, here's the thing. Here's my opinion on it. And I think this is a very good idea for the vast majority of Canadians. We have two different products here in Canada. We have term life insurance and we have permanent life insurance. And permanent has both whole life and universal life. Now, this is what I would say. What's the purpose of life insurance? Well, the purpose of life insurance is to protect our family in the event that something unfortunately happened to us. That's the point of life insurance. That's the need for life insurance. If you were to pass away and no one would be financially impacted, you don't need life insurance. So if that's the purpose of life insurance, what would be the best option? Well, it would be the most affordable option that can cover our family. When do they need it the most? When our kids are growing up, when we just bought a house, when we just got a car, we just started a job, we just started our life, we have a spouse at home. If we were to pass away, they would be very financially impacted. I'm in that exact situation. So term life insurance is the best and most inexpensive option to cover yourself for that period of time. Now, if we play that scenario out and we get to age 50, 55, 60, at that point, maybe we're starting to look at canceling our policy because our kids are out of the house, we have some investments, our house is now paid off, we don't have any high interest credit card debt, our spouse, is more financially independent. Now it's a good time to start looking at canceling our policy. Now, you may have heard, why don't we buy a permanent life insurance policy because we may need one day and you can use it as an investment. Here's my 2 cents on that. Investing in life insurance is an incredibly complicated strategy. There's a lot of moving components. There's a lot of variables and a lot of things that can go wrong. There are a lot of things that can also go right with that strategy. However, for the vast majority of Canadians that have already maxed out their RSP and their TFSA and they have high interest credit card debt, this is not a good idea. And I made a lengthy video comparing apples to apples, just a standard RSP to invest in a life insurance strategy. And the RSP just knocks it out of the park. And it's simple and it's easy to understand and there's nothing that can go wrong. If you're interested in that video, drop a comment below and I will send it to you. However, this is what I would say. For the minority of Canadians that are the high income earners, maybe it could be a good idea. But for the vast majority of Canadians, term life insurance is the best option in my opinion. Number 4, you want to understand what your rate is and what affects your rate. So right off the bat, number 1, age affects your rate. So the younger you are, the cheaper it's going to be. The older you are, the more expensive it's going to be. Here's the thing though. You want to buy life insurance when you need life insurance. If you get an advisor that says you should lock in your rates for life insurance while you're young and you don't need life insurance, I would run away in the other direction. I think this is a bad idea. And here's why, okay? Again, we're buying life insurance for the protection of our family and our loved ones that are dependent upon our financial income. If you're not there yet, why are you wasting money on a life insurance policy that you don't need yet? Okay. Yeah, it may be nice to lock in the rates, but you have no idea when you're going to get to that point where you have financial dependence. Maybe you're age 20 and it'll be 10 years before you're married and have kids and you have a house and now you need life insurance. So why pay for life insurance for 10 years when you don't need it? And the rates between 10 and 35 are so similar in that rate band that it just doesn't make sense. Now, with all that being said, if you have a need for life insurance, yes, I would try and lock in your rates as young as you can to get that preferential rate when you need it, not when you don't. Now, the other 3 are pretty straightforward. Gender plays a small role in it. Life insurance is more expensive for men than it is for women. Sorry, guys. The 3rd one is your smoking status. So if you're a smoker, it's going to be a lot more expensive. If you're a non-smoker, it's going to be cheaper, of course. And the 4th one is your health condition. So if you do have some health conditions, it's going to vary depending on what those health conditions are. But relatively speaking, the more healthy you are, the better your rates are going to be. The less healthy you are, obviously, the more expensive the rates are going to be. Now, make sure you stick around to the 5th point, which I'm about to get into. So I guess we're going to get into it right now because I'm going to tell you guys a little secret to make sure you get the best rates possible if you do have health conditions. So number 5 tip for getting life insurance for the first time, make sure you're working with a broker. Here's the thing. 90% of the insurance companies in Canada sell through what's known as a broker channel, meaning that when you work with a broker such as Affinity Life, you'll come in and we'll have a bunch of different companies and we can have a conversation if it's a specialized case and we can say, hey, you know, after what you've told me, I think that this company would be the best one. And we're going to shop all the different companies to make sure we're getting the best rate for you. If you work with a captive insurance company, meaning they only have that one company's products, chances are you're probably not going to get the best rates and it might not be the best product to your specific needs. So always work with a broker. Don't work with a captive broker and just get one product from one company. It's probably not the best way to get it 99% of the time. The last thing that I'll share with you guys here is make sure if you have a specific health condition that you talk to a broker before ever applying with any insurance company ever. Now, I'm going to tell you guys a little secret here, okay? There is something known as the MIB in Canada, which stands for the Medical Information Bureau. Now, what does this mean, okay? Well, this is essentially a database where insurance companies will post decisions and rates that they put on clients. So if you go to one insurance company, let's say Sun Life, okay? You go to them, you apply for a product, you say, hey, I have this health condition. They look over the application and they say, unfortunately, we're not going to be able to give you life insurance because of this health decision, or they're going to rate you or whatever it is, okay? That is now put on this database, which every insurance company in Canada has access to. So if you say, well, that's not a very good rate, and then you go to another insurance company and you apply with them because maybe you talk to a broker and they say, oh, this is a really good company right here, and they don't care as much about this health condition. Here's the thing though, when you go to that company, even if they have no questions on the application about that specific health condition, they're going to look on this MIB database and they're going to say, hey, this guy applied for life insurance right here, and he has this condition. So we would have given it to him at standard rates. However, because we know about this now, we're going to rate him or we're going to decline them. So there's many different applications across Canada from different companies, especially depending on what health condition you have, where some companies might ask questions about that health condition and some might not. But here's the thing, the companies that don't ask about it, it doesn't matter, because if you already have that flag on the MIB, they're going to look at it and they're going to say, sorry, even though we don't ask questions about this, now that we know about it, we can't just issue this life insurance in good conscience for our fiscal responsibilities for our company. So if you have any specific circumstances or any health conditions, make sure 100% that you're talking with a broker or reaching out and booking a call with us and talking about your specific circumstances to make sure that you're not going to mess up this MIB and potentially not get life insurance from anyone in the future or get less preferential rates from one of the companies. So in conclusion, listen, here we go. Term, I think, is the best option for the majority of Canadians. If you're just looking for a very easy, simple solution, term life insurance is the best option. Number two, make sure you don't get some type of analysis paralysis. Here's the thing. There's so many options out there. There's a lot of confusion out there. Keep it simple. Don't get analysis paralysis. Pick something that's affordable. Pick something that you're not going to have anxiety looking at every month that it leaves your bank account, and move forward with it. Don't just sit on the sidelines and wait and put it off for the next month and next month and next month, because unfortunately, here's the thing, accidents can and do happen to everyone in Canada and around the world, and leaving behind a huge mess for your family is not something that you want to do. So something is better than nothing. Get something in place. And if you guys are looking for instant term life insurance quotes and the ability to apply online, check out Affinity Life. With that being said, if you guys have any questions, drop them in the comments below as I reply, to each and every single comment below. And if you guys are enjoying this content, all I ask is that you give it a thumbs up, and I'll see you guys in the next one.